All right. What is up, my fam? How are you guys doing? It is Saturday. It's Saturday. We got sound. We got a little live stream for you. I got to make this quick. All right. I got to make this quick. I got to run to the pet store. The camera may or may not work on us. You know how it is. If y'all are new here, you're going to find out that this camera likes to do whatever it wants. So I first want to say thank you for being here. Hit that like button. Subscribe to this channel. We trade live right here Monday through Friday, 7:30 to 4. We come in early in the morning. We get our news. We get our levels. 9:30, 10 o'clock, 11, 12, whenever it is, we execute. We execute. We stick to the plan. And we make some money like we did this week. If you were with us, we took Moderna Thursday. Got down in the morning on Friday. Took profits in those at 16 cents. Exit of 53. I want to say at 53, it was a 225% gain. I told you last week that I was going to get myself a 100% trade this week if the market allowed me to. Okay? And I did. And I instinctively, I had some intuition where I knew I was going to get that back. And I did. And I want you guys to be able to do that as well. So that is the point of these live streams. Now, tomorrow night, we're going to go over a lot more charts. I want to cover a few things real quick, if you don't mind. And again, one more time, we're getting to 1,000 subscribers. We get to 1,000 subscribers, I don't have to say like, share, and sub ever. If you could just show some love, subscribe if you haven't already done so. Like this stream, share this stream. And when we get to 1,000 subscribers, I'm going to do a giveaway. I've already said that. But that's not why you should do it. You should do it because I'm here to give you valuable information. I've been doing this for 10 years, guys. Over 10 years, a little less, about a little more. It doesn't matter. You can't take the time and the different markets that I've been trading in. Okay, so that's one thing you can't take from me. And what I want to do here is be able to create a place. You know, this is the early beginnings. I want to create a place where traders can come to and we talk news, we talk trading, and we trade live right here Monday through Friday, 7:30 to 4. But I want to have a studio. I want to be able to, put it on that scale. And this is just the beginning. You can't just, you don't just start there and think you can just do your thing. You know what I mean? So to all the day ones, I just want to say I appreciate you guys. Again, I got to hurry up because I got to get some pet food. Let's talk about this week. Let's talk about the Qs and how they did not close at a new high. There we go with the camera. So you guys don't need to see me anymore. I'm just going to deactivate myself. I love you guys. Appreciate you guys. But just bear with me. All right. So big news. Powell says he is not going to cut rates. Me personally, I don't believe him. I believe that he feels right now that he may not have to cut rates. But I think that's going to change. Why do I think that that's going to change? If we continue on this path of jobs or companies or CEOs or companies bringing out statements that they're going to lay off X amount of people, right? You had an onslaught second wave of layoffs. That's going to start hitting the scene. Jobless claims have been ramping up the past 2 weeks. Now we may stabilize. Hopefully we don't pull back and sit there for a while. We don't know how this is all going to work. But I can tell you right now, a lot to do with it could be the weather. There were some snowstorms, what we're not talking about. So I don't expect this to continue to jump. But if this can continue to stay in that direction, if these layoffs do start happening, if these companies go to the drug test first, the drug test and the raise your hand if you want to take a leave, right? Raise your hand if you want to voluntarily quit. Okay? Those will take time to start seeing those type of things happen and those numbers come out. I don't know how long that could be. It could be anywhere from 4 to 6 months to a year, year and a half. But I assure you it's coming with the spending and a lot of the other things that I'm about to show you. So, initial jobless claims, I'm pretty sure came in at, I want to say 220 something. I know it was 2 weeks ago we came in at 189 area. I'm sorry I don't have this up. Previous week, there we go. I apologize for that. So, but this is moving in the correct direction. This is moving in the right direction. The inflation has been down to their target. Now, I'm going to go over with some of the stuff that I wrote down in my notes with you. But, I don't understand the scarcity of, is inflation going to pop back up? China's not closing down. Unless you think there's going to be another pandemic, I don't think you're going to have to worry about this, pal. I really don't. I think you had an onslaught of inflation because China shut down. There was the, what they want to call the constraints in the supply issues and all that fun stuff, right? Whether or not you saw that or you didn't see that, right? Some of us did, some of us didn't. I didn't personally have a major problem, fortunately, okay? You could take notice in some things that stock wasn't really coming in certain items, but for the most part, it's not like we didn't have the things that we needed. So I'm just trying to get to Thursday real quick. So the initial jobless claims this week came in at 224. I was right. So 2 weeks ago, this past week was 224. The week previously 215, but the week previously was 189. So we're getting this like leap in jobless claims. Now we did have a snowstorm. There could be weather issues related to that. It's hard to say exactly why those numbers peaked like they did, but that could be one reason. Let's see if we can sustain this type of path, though. I think they cut in March, or at least the second Fed meeting. Not the next one, but the following. All right. I know he's really trying to talk down the markets with higher for longer. We want to make sure that we have this inflation under control. I don't think that there is a reason to be so scared that you don't have it in control. Okay? And again, thank you guys. If you guys have any questions down below, I want to know, how was your month? What are you going to improve on? I have some things that I'm going to share with you guys that I want to improve on, not only this month of February, but this week, okay? And again, guys, show some love. Hit that like button. Subscribe if you haven't already done so. And share this with someone if you could. You would allow someone else to be able to find this channel that would like to be here and that would like to trade with us. It doesn't have thousands of dollars to just give to someone else for some trade ideas and to trade with a group. So if you appreciate the hard work and the stuff that we put out, which a lot of this channel is going to change, we thank you. Just that's all we ask. Hit that like button, subscribe. So, and again, comment down below. How was your month? How was your month? I want to know. And what are you going to work on? Okay. What were some of the stocks that you traded? How did they go versus what you thought? And how did you execute on the entry, the exit, all that fun stuff. So leave that down below, guys. All right. So Powell has a 60-minute interview. And I'm going back to the jobless claims and Powell. This all ties in together. So Powell is on 60 Minutes this Sunday. If you're on the West Coast, it may be a different time. But for me, it'll be around 8 o'clock, I think. So during the Fed conference, okay, in the brief statement, if you guys don't know this, they took out that the banking system is, it's stable, it's robust and stable. Or you guys know the words that they use. I can't remember. They've been using the same words throughout this past year that they're that they're fine, that they're okay. Well, guess what? They took that out. If you don't know, they took this out, right? After you saw, which I'm going to touch on here in a minute, New York Community Bank. All right. Now, this bank is pretty big. They hold over $100 billion, I think, in assets. We'll get into that. But Powell states the economy has made good progress towards their dual mandate objectives. Inflation has eased from the highs without significant increase in unemployment. Inflation is still too high, he says. Ongoing progress in bringing it down is not assured. Okay, path forward is uncertain. There is uncertainty to how this all plays out. They don't know. They have the tools. They don't know how this is going to work. Now, there could have been some words missed here, and either, that it was changed with Microsoft due to like editing itself and stuff like that. So bear with me on that. So he says the economy has made great progress towards the dual mandate objectives. Inflation has eased from the highs without a significant increase in unemployment. Well, we know when interest rates start, it's not until when they stop, and usually in the history has shown, they stop around 5 to 5.5. Well, once they have stopped and got to that point, no matter if it's taken them 2 years to get there, whether it's been the fastest in history like it was this time. I wouldn't say this was the fastest in history because I don't know that. But from the point of when they stopped raising and it was the longer part where they just held it, it was roughly about a year and a half to a little bit over a year before you really started to see those unemployment numbers tick up. Okay, and I've been saying this for a long time. If you just go back and look and get your hands dirty and do the work yourself, you will be able to see those things. And again, if you're new and you don't know how to do those things, that's one thing, right? If you need some help, comment down below. You know, what is it that you need help with, or what are some things you would like to learn? What are you trying to get out of the market? Okay, because this is the greatest equalizer, and this is one of the greatest tools that we have to be able to retire. You know, just the fact that we can own these companies is you know, we're not as grateful as we should be. You know, these are some of the things that go on that we don't realize that we have this opportunity where other people do not in other countries. Okay, in other places, they're not allowed to invest in companies and grow with the best companies in the world. Okay, so let's be grateful. We need to be grateful for that. The men and women who die and are out fighting for our freedom to be able to do these type of things, right? Where I can have this live stream. Let's, you know, say a prayer for the two men that were lost at sea when the boy fell off of the boat and his partner went in to save him, and they didn't make it home. There was just you know, in Jordan where they got hit with the drones. So, which is another news article that we may or may not talk about, but you know, the strikes they had started on Friday. So, but anyway, this is what Powell had. These are some of the comments he made. He has said that the path forward is uncertain. So this is like they don't know if they're going to have a hard or soft landing. He did state that they did not want to wait around for the economy to turn down. Okay, he did not want to wait for the unemployment to really start to tick up. Well, I can tell you just with if it's not weather and maybe a few things that are out of our hands, we have had, this has been the biggest jump. This has been the biggest 2-week jump in unemployment that I have seen. I can't remember. I'm sure it goes back and it goes back a ways. Probably COVID. Okay, it's probably the biggest jump in unemployment since COVID, I would imagine. He did state that they did not want to wait around for the economy to turn down because that would be too late. We are on risk management mode. He literally said that with his in his words, where we are in risk management mode. The timing will be linked to confidence that inflation is on a sustained path down to 2%. So we're going to get some inflation data. And what I did also touch on that I did not write here, guys, is if you guys see here on Trading Economics, this is what I use because, again, you got to remember, if you don't, 90% of, or I'm going to say 75% of the S&P is they bring in income from around the world, not just here in the United States. The majority of their business is outside of the U.S. So you need to kind of at least, you know, acknowledge and understand and just see what are some of the things that are going on around the world. Okay, so that's why I use this. Some people just look at the U.S. That's fine, whatever floats your boat. So. But last week we had, well, I don't know why I did this. So anyway, last week what I'm getting at is there was a lot of inflation data, okay? There was a lot of inflation data that came in. You had GDP growth with also, okay? The GDP growth around the world was also like, it was a little bit better than expected, a little bit better than forecasted and consensus. But or about flat, if you know what I'm saying. I know I'm just trying. The reason I'm talking fast is I want to get through this really quickly. So it feels like worldwide, this fourth quarter was really strong for whatever reason, whether it's because of unemployment that's been, you know, the labor market's been so tight. But it was a pretty strong quarter worldwide. Okay, they came in right around expectations and or above. So what I do want to bring to you guys' attention was the inflation rate year over year, 4.1. Consensus forecasting, okay? Australia, it's coming down, all right? PMI, GDP growth, import prices, inflation rate year over year, 3.1. Previously, 3.7. This is France, okay? You're seeing a trend here, All right, retail sales year over year there. Nope, that's not what I want to see. Unemployment change, my 2000 unemployment rate, blah, 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 blah. All right, so, but what I'm getting at is if you look here, inflation rate year over year, month over month, zero point 0.2 versus 0.1, 0.2, 0.4. That's the goal that our Fed wants to get to. Year over year was 2.9, previously 3.7, so that's a beat. Okay, not just us, but around the world, inflation is coming down. China has opened back up. Okay. Europe, inflation rate year over year, 2.8 versus 2.9. Consensus, 2.8, 2.8, previously 2.9, down 0.1%, coming down. Okay, we are at the 2% target. He doesn't want to go below 2%. He wants to stay at 2% because anything below is deflationary. We want inflation. That's how this world works, okay? At least the United States and Japan and Germany and France and Europe and Australia. All right, so with that said, all right, Powell has tried to come on the stage and talk about how they're not going to raise rates the next meeting. I cannot see that taking place. If he does and he sticks to it, then I don't think he's in risk management mode. If we continue to see jobless claims ramping up like they are. Their next meeting isn't until March. So as this week comes on, I want you guys to know this week we have a ton of Fed members. If you were with us live, you saw during the Fed day and even afterwards, guys, I think it was Thursday night, Friday morning, this 5.25 to 550, 5.5 I should say, was up to 80%. Okay, oh, Friday, by the end of the day, this had came down and 5 to 5.2 has been brought up. And what this is if you're new, this is Fed fund futures. Okay, the contract for these futures, that these are traders basing around what the Fed is or is not going to do. And normally the Fed usually sticks with this because the Fed does not want to surprise the market. ZQH4 are the contracts. Okay, this expires the 28th of March 2024. All right, mid price 94.7. Prior volume 38,000, prior open interest 125,000. So there's a 38% chance of easing, and there's a 62% chance of no change, that we remain right where we are with that target rate of 5.4. They actually raised it like 0.1%. You know, it's 5.3 Fed funds rate, and it was 5.4. I don't know. I'm not a banker, but I feel like that's a little jump. Okay. So what this could mean is if interest rates start to rise, guys, it's going to affect financial conditions. And if you guys see here, going back to COVID 2021, 2020, you can see that this is funny. They have eased the most since COVID. We're back near COVID levels. I think this is going to start rising again. If you start to see interest rates rise because the Fed is sustaining this level for longer, you're going to see rates rise with the risk of a recession, and the interest on those start to pay more because there is that is a risk that is counting it. It is telling you that the 2-year it is more risk. It's, I don't know how to explain it to you guys with your new, because I didn't have this written down. Why is my stuff not working, guys? Sorry. Hold on one second. Okay. So the risk for the 2-year, it is riskier, okay, for a 2-year note than a 20-year, because there is more risk here in the near future than further out that we don't know what's going on, okay? So it is risk, right? As these goes up, as the cost of capital goes up, risk should also go up, okay? And I'm going to show you a chart of that. So we're going to watch these Fed members. I'm telling you guys, we have a lot. I think we have 10 to 12, 9. You have a lot of Fed members coming out, and they're all speaking at colleges, different events. So they'll be on CNBC, Bloomberg, I'm sure. So watch these Fed members, and as these Fed members are talking, you're going to see the Fed fund futures start to change. All right, and we'll be going over this. Join us live Monday through Friday, 7:30 to 4, right here, guys. We had a 225% gain, a 35% gain, a 13% gain, had a very small loss. I traded just the amount of trades that we gave out, and we're going to touch into that. Snow, Apple on Friday, Moderna from Friday or Thursday going into Friday. AMD 175 calls Thursday all into Friday. Bang, bang, bang. Like, dude, if you do not join us, I don't know what you're doing, especially if you're struggling. If you are a trader that's struggling or somebody that wants to learn in the markets, I urge you to visit us. All right. And tomorrow night, you can join us right back here. We're going to go over a lot of charts and go up with some game plans, cover some more of the news that comes out over the weekend. So maybe we'll even watch Powell live together. We had a great month, guys. 3 green weeks with a break even small profit, maybe small red. I have to go back and look. I'm still doing that this month. This was a great month for us. Was it for you? If it wasn't, come join us. We're going to help you change that. It's up to you to execute. I can help you guys find ideas. I can help you guys say, hey, this is where I'm going long. This is where I'm going short. This is where I'm going to take profit. If it starts to head in the other direction, I wait to get in it, it's up to you to execute. But I try to put forth ideas and all that fun stuff for us to be able to profit from, right? To make some money and be able to help our family and pay for that trip, pay for that retirement, and just bring your start bringing your, developing your net worth at the end of the day. All right, so we talked a lot Wednesday or Friday on the stream about AI and all that fun stuff. That's not where I wanted to go. So why I bring Powell up. All right, so right here. I'm sorry, I keep saying All right, because I'm trying to hurry. So the Fed's in risk management mode. They don't want to do too much too quick. So in my opinion, guys, I feel like we're down to that 2% level just about. As of right now, I don't see the risk because there's not a major war. There's just like not something major going on at the moment in my eyes to say, hey, inflation's going to ramp back up like it did prior to COVID. Now, you do have this shipping stuff and all these other things, but shipping rates they went up, but they came down. I think they were starting to go up, but I still feel like there's just not the risk of like what happened in COVID, okay? Because the biggest manufacturer, China, that is not shut down right now. They're getting their economy going. They're actually starting some quantitative easing right now. And we talked about that last week. And this week was that February 5th, they're going to start lending, right? The banks are going to have less capital. Their margin requirements, their requirements to hold capital and holding assets on hand is going to get dwindled. So the China Communist Party is saying, hey, we want you guys to lend. We want to ease financial conditions so that you guys can start lending and things can start picking back up and we can get out of this real estate hole that we're in. Bringing me to regional banks. Okay, regional banks had a very tough week this week. If you don't know, again, New York Community Bank reported earnings and they pooped the bed, okay, in layman's terms. If you could, hit that like button, subscribe, guys. I appreciate you so much for allowing someone else to be able to find this video and help someone else, not just me, not just you, but someone else that would like to be here and wants this information. So, New York Community Bank fell roughly 70, they opened 74% lower on Friday, I think it was. Then we'll go to the chart in here in a second. After their earnings, NYCB Bloomberg reports largely an apartment lender, commercial real estate and apartment lender in NYC area. Rent-controlled, rent-stabilized apartments is what they mostly, find themselves doing business in. So those buildings are affected, okay? Why was there issues? Because those buildings are affected by New York rent rules, which is New York has capped the amount the owners can charge rent, okay, that they can charge tenants, along with higher interest rates. And what that does is it puts a lot of pressure and kind of squeezes these owners into either selling that asset, okay, at a loss, or, not barely making ends meet to pay those bills. So, because if you cannot raise your rent, and inflation has caused the interest rates to go higher from 3%, 2%, up to 5%, and you did not lock in that lower rate, and you cannot charge rent, you're finding yourself in a sticky situation now. You might even just haul off and quit and start up another business and say, to heck with this. So that's where New York Community Bank finds themselves in a pit, right? A little bit of a pickle. I would, we could say, they posted a big loss. It seems to be more of a New York, I want to say communist, but New York Community Bank broad, or more than broad, right? It seems to just be pertain to this bank in New York because of, again, New York City's mandates on how much they can and cannot charge tenants, rates, all that fun stuff. So they need to, they need to shore up their balance sheet and kind of get these things fixed. All right. Data. GDP broadly rose worldwide. In my eyes, inflation is still pulling back below expectations and forecast worldwide. Jobless claims here in the States have jumped in the direction the Fed wants to see. Next week, a lot of Fed members speaking, which we already talked about. So the market may, I want to cross that out and say will, be volatile. We have ISM and PMI data, jobless claims. Other than that, we do not have much data next week, but we have some earnings. We have, we do have some data. So earnings, mega cap tech has reported. All right, everything is still decent, right? These companies are not going to be crazy growing at a rate like they were in the past because they've already pretty much outgrown the growth, right? It's just sustaining those revenues, consistent big revenues. So it seems like for the most part they're in okay shape right now. Sustaining consistent revenue. We're seeing divergence in the semiconductors. We're seeing the winners and the losers in that space. And I talked about this before earnings came up. Now, why am I bringing this all to you guys' attention? Because these are trade ideas, which we will dive into more, all right, on how to trade the market. Like, how do we want to position ourselves? Where do we want to position ourselves? So if New York Community Bank isn't doing well, and we're seeing regionals not do so well, what could I do? Well, we missed this trade because I kind of forgot about it, unfortunately. But this is KRE, regional bank. So if there's trouble in the regional bank sector, this is an area we want to look to either get short by puts, maybe sell calls, sell puts, and spreads, whatever we need to do to make some money. All right. So these are all areas that we can look to make some money. All right. Now, I want to go back really quickly, and I want you guys to know something. I told you guys 2 weeks ago, I'll try to turn the camera back on. I told you guys 2 weeks ago that I sensed a bit of profit taking. Okay. When we started to pull back, it was a little bit greater than just a regular pullback. Okay. In my eyes. Alrighty. So if we go ahead and we pull up, and I want you guys to see this because I want you guys to start understanding how this market has gone from where it was at to where it's at now. Back in March, we started the bank term lending program. And what that is pretty much the Fed saying, okay, if you guys need to come up with cash, and in order for you to not raise money and find yourselves in a pickle, you can give us those bonds that you have, because you got to understand, some of these banks that bought bonds 5-10 years ago or did not structure themselves in the appropriate manner to weather a storm, which they're all taught how to, right? There is a basic, hey, if this then that scenario that you play out for the future, because you can manage yourself to where if stuff hits the fan, you're going to be okay. You may not make a lot of money, but you ain't going to lose money. You'll be able to sustain your business. But they wanted to make some money, right? The cost of the dollar was cheap, right? Cheap money. What do I mean by cheap money? I mean rates were low. You did not pay a 10% fee to take out a loan. So, depending on you guys know what I'm getting at. So what I have here is financial conditions, and financial conditions are to me. All right. Again, a lot of this stuff is just my opinion. These are some of the things I see. And if you guys do trade anything that I show you, it's because you wanted to trade it and you thought that me bringing this idea up to you, you were enticed to say, okay, this does look good. I didn't see that. Let me take the trade because I want to. Not because I told you to or because, I'm telling you, what it is that I'm doing. Don't pretend that you have to do that, right? I can be wrong. I will be wrong. It's just I'm going to be right more than I am wrong. And my wrongs, I'm going to be very good at losing money. I'm better at losing money than I am making it. What do I mean? That makes no sense, right? Oh, you better lose your money. No, you need to be great at losing, which means you lose a minimal amount, and you let those runners go, and you take profit as it goes. All right. I tell you, just Friday literally about made my whole month. Just Friday morning. Just Friday morning, because I don't even think I had really that many losing trades. I didn't really have any losing trades other than the Apple and the small Netflix on Friday. That Apple short on Monday. But anyway, national financial conditions have eased. And what do I mean by that? So the Fed is pretty much providing liquidity to the banks. They're running off their balance. They're having balance sheet runoff, which is QT, quantitative tightening. All right, which is not bearish. People mix quantitative tightening with bearish. No. Yes, you'll get a sell-off and a pullback, but that doesn't mean that you're in QT for 4 or 5 years and you're just going to sell off. No. Volatility. It is QT, at least to me, and again, it's for anyone, or everyone can have their own opinion on things. Just because we're in quantitative easing does not mean you're going to be in a bear market. You could pull back, okay? But the thing is with QT is it brings on more volatility. Now, with the banking issue that we had, what we have here is financial conditions. You see this chart here. You see this chart down below. Now, what this is showing you in red is risk appetite, right? Risk appetite is pretty much negative, right? Look here, okay? This is adjusted, okay? You have risk, leverage, and credit. All ease to almost COVID lows, right? Back to those levels. I feel like this chart is going to start rising. This chart starts to rise. What does that mean? I think, in my opinion, that would mean that rates probably bounced a little bit. And if rates do not bounce, all right, the bank term lending program is done here in March. And when this starts to bounce, we should see the market pull back. I would expect the market to pull back. Now, here is the same chart, okay? Here is the same chart. Here's the same chart. All right, and what I'm going to do is I'm going to bring up the S&P with it, okay? Now you can see here, and I've done this a lot. Look at COVID; it sells off, bang. Look at financial conditions, tighten, bang, goes up high, and then it just falls off a cliff. And then what happens? The market starts to go higher as those financial conditions ease. The market goes higher, and look here, we start making the higher move, and what happened? There's a little lag effect. The market starts to pull back. Financial conditions are at their highest, or at their peak of the past couple years. We're at our lows. Financial conditions are at their peak. It starts to pull back. The market starts to go higher. I expect now financial conditions to start tightening and the market to start pulling back. I've been saying it. This week was the second week that I just brought up to you guys that I noticed that last week, not this past week, but the week prior, was a bit of profit taking. Now, we have some solid volume here, guys, and I'm not talking about a market crash or anything crazy like that. But you have to, feel as though there is a pullback. What's going on here? Here we go. Okay. All right. Good deal. All right. So, again, the Fed members. What am I getting at? So, the Fed members are going to be out this week, all geared up, talking market. So, you're going to see this market, pull back, go higher, then go lower. And then it's going to be whipsawing because these Fed members are going to be talking this market all over the place because you're going to have different opinions because some Fed members are bullish, some are bearish. I want you guys to know that going into this week. So have your levels. Okay, have your levels and know that these Fed members are speaking and what time they're on. Okay, you don't want to be in a trade and then all of a sudden, oh, hey, you just got news the Fed members said, no, we only plan on 2-3 cuts this year. Market may pull back, like a certain news that brings down the market. Okay, so we have that. Okay, I want to get into some stuff. And again, if we continue with these jobless claims next week, I expect the Fed to start cutting. Maybe we get 4. Okay, maybe we get 4. All right, I don't know. But I can say that the Fed will start to cut if we continuously. You get 2 to 3 more weeks and CPI is down, PCE is down, inflation's down, and that labor market, those jobless claims are ramping up. Okay, I guarantee you we start seeing the Fed talking dovish. Kinda. Not really dovish, but yeah, we need to start pulling rates back because Powell has told you that we want to get ahead of the game. So this year we have 1, 2, 3, 4, 5, 6, 7. We have 7 meetings left. I think we could start in June. Okay, for sure. For sure, June. That's enough time. That's 6 months away. Roughly. All right? Roughly 6 months away. Let's see how the data comes in. Let's see what happens. And we're going to be watching as the Fed speaks this week. Take notice right now on Saturday night, 62%, 38% as of the close. Friday morning, Thursday night, this was 80%. This was like 20-something. So it's also pulled back. Banks are not going to be okay if they continue holding rates where they're at, and this bank term lending program, they start to get rid of it. We can pull that up because, listen, this is the market, guys. This is the market because ever since they started this, there has not been an issue. There hasn't been a reason for the markets to pull back. Financial conditions have eased, and until financial conditions start to tighten up, we can expect, look at this liquidity that's being added. And the banks are okay, so there's no problem. Nothing to see here, right? You didn't have a government shutdown. We don't have a bank issue. We don't have a CPI product issue. Earnings weren't that bad. They're sustainable earnings, right? People are still spending, so the market should go higher. But I do think that we should be getting a pullback due to these financial conditions that should start to tighten. If they start to tighten, we need to look to see if yields start to go higher. All right, if yields start to go higher, this should start to raise a little bit, and then we can look for that pullback, maybe another buying opportunity for the long term. Find some of those names that are on their lows, okay, that haven't been bought up, and let's start putting some capital to work. Once this starts rising, it gets to that point. I'm not saying now, and I'm not telling you what to do with your money, but that's what I'm going to be doing with mine. All right, I have sensed this 2 weeks ago that I felt like we're going to start getting that pullback in the market, and I really feel like this is going to be it. Okay, so I got that out of the way, guys. Earnings. Okay, let's talk about earnings real quick. McDonald's, Cat, Palantir, right? Snap, Ford, Eli Lilly, Spotify, Spirit Airlines. I talk ARM Semiconductors, which they don't make the product. They just make blueprints and they contract out that. We have Affirm, Pinterest, right? Under Armour. Again, Thursday, wholesale inventories, initial jobless claims, blah, 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 blah. All right? If you guys could, do us a solid. We're going into the charts right now. Hit that like button. Subscribe if you haven't already done so. Show us some love. Please, comment down below. I want to know how your month was. This way, I can be able to make these streams better and these videos better. Look what we got, baby. We got the SSD card. So now we can actually start putting out some educational things and editing. All right, so things are about to get really, really good here. And again, please, if you could, show some support, like, share, subscribe. And this would allow someone to be able to find us, trade with us, get educated, to better themselves. This is why I do this, to help you guys and help myself, right? We all come up with ideas, and we make things happen. Okay, we make things happen. We had a great month. If you're just finding us now, welcome. Join us. We trade live right here Monday through Friday, 7:30 to 4. I've been trading for close to 10 years, if not more, if not right around that area. I have a lot of time in different markets. I have a lot of time trading different styles. You guys need to start being athletes. All right? I need to start being more of an athlete, okay? Because me streaming has been a little new, trying to make sure the chat's answering questions in the chat, making sure the mic's on, making sure we have sound, making sure that the camera's working, all these other things, and finding my trades, putting on my trades, all this and that, because I'm a one-man show right here. So what I want to say is, thank you for the patience. This week going forward, what I'm going to work on is getting my trades out, writing them in chat. And again, I'll give you guys time. In the morning, I show you guys the levels. I'm long here, all right, or I'm short here. This is where I'm taking profit. I do all that in the morning. And we talk about your guys' stuff too. It's not just about me. So, and we do trade recaps and all that stuff. But again, if you could comment down below, let me know how your week, How was your month, the first month of the year? How was it? Because if there's something you could work on, or let me know what you think you're struggling with. Like if you think it was your entries, if it was your exits, if you just didn't understand like the direction, if you got the direction wrong, were you in the wrong names, were you in the wrong options, maybe you don't know. Please comment down below. Let me know some of the trades you took or whatever it is, right? What were you long? What were you short? How did it work out? What do you think you can improve on so that I can help put out different content and be able to help you and others, okay? Because if you're having a problem, there's someone else that's having the same exact problem. All right, but again, Alibaba, Disney, Spirit, PayPal, Roblox. It's going to be another action-packed week, I feel like. Not as big as last week, but still a pretty action-packed week. Spirit Airlines as well for you, going to be reporting. All right. So we talked about Mega Cap Tech. They reported pretty much sustainable revenue, right? They came in right in line, a little bit better than expectations, shy in some areas. Right, like Starbucks, they had weak China numbers. China was shut down. Not this past quarter, but they just had, around the globe was a little weak. But here, they did great. So I gave you guys those, right, for the earnings that are coming up this week. We have Cat, McDonald's, Snap, Eli Lilly, O'Reilly Auto Parts, ARM, Semiconductor, Save, all right, PayPal, Baba, Palantir, CMG, Chipotle, which is CMG is Chipotle. Roblox, much, much more. All right, Baba. I've been looking at Alibaba to trade. I have not traded it yet. All right, I'm going to go over that chart. But there is a ton of opportunity out there. And this week, if you could get to work and go make some plays, my boy, what are you doing? Or girl, let's go get this money. Let's go increase this net worth. Let's go help mom and pop. Let's go on that vacation. Let's start paying for kids' colleges. Your kids' college. Okay? Cash is trash. Cash is trash. Cash is trash. You might as well just throw that shit away. All right? Because by the time 10 years from now, it ain't going to be half. You might as well just rip it up right now. Or put yourself in some assets. Put some assets under that ass. Okay? If we get this pullback like I think we're going to, we got to deploy some capital, all right? At least I'm going to. We don't have to do anything, but, if you want to just get out of that state of, if you feel like you're just not getting somewhere, really think about what it is that you're doing. Are you trying to save money? Are you going to the bank and saying, I want to take out a loan to pay for a hunk of metal that's going to rust and go to, like, practically nothing in 10, 15 years? Or are you going to go to the bank and go take out your little 10 grand? Go buy a little shit box, throw the rest of that 8 grand in some assets. What you gonna do? All right, it's time to get ahead. But again, I'm here to talk about trading, not investing. All right, and if you're new, again, please comment down below. How was your month? How was your week? I want to know because I would be able, let me know what you feel like you're struggling with. Again, was it direction? Was it entries, exits, and not holding long enough? What were the names? Did you think it was going to go higher, lower? Did you not have enough time? Let me know down below, guys. I greatly appreciate it. And I appreciate you guys watching because it shows me that you guys want to do better for yourself. There is so much opportunity. I think there's 27 trillion US dollars out there. Just in US, not Europe, Australia, Japan, right? You know how much money of their money is here too? And our money is abroad? There's no reason why you can't get your little piece, okay? Go get your little piece. Come join us. We trade live right here, Monday through Friday, 7:30 to 4. I assure you, come join us. If you would have joined us last week, you could have got the Apple short. We took that 185 put on Monday. All right? It was in the money by Wednesday. You could have got out of it and then back in it, and then you could have went long Friday morning out the gates. You could have went short Moderna for a 225% gain, which we're going to get into. All right, winners and losers of the week. Again, of the week, okay? Nvidia, 8.4%. Amazon, 7.9%. Race was up 11.5%. Tesla is lacking that sector, okay? It's very weak. I'm looking at Tesla next week. Meta, 20.5%, 20.5% on the week. It pretty much did that Thursday night, Friday, right? So, Meta, can you do something for me? All right? Losers, PDD, which is Pinduoduo. minus 12.12%. Google, minus 6.6%, just under 7%. Charter Communications down 15%. UPS down 11%, just under 11%. BXP, 10.5% down. Regional sector as a whole, Qualcomm down just under 6%, 5.99% for Qualcomm. Oil and gas, E&P sector was very weak also. Again, this is on a weekly time frame. Alrighty, so that's that. Let's go bring up the charts, guys. And I want you guys to take a little notice on a couple things other than the plays, okay? As we get into these plays and I get into these charts, again, I want to hurry up so I can make it to the pet store. Hit that like button, subscribe if you haven't already done so. As soon as we get to 1,000 subscribers, I am done saying it. But I do want to say right now, though, I do appreciate you guys. I do. All right? I'm trying to build something here, and with your help, you can help us get to another person. Help them become a better person, a better trader, all that stuff, guys. We're only here once, guys. We're only here on this earth once. Do you guys get that? Make the most of it. I know you do. I know you want to. You're here. That's a start. It's time to do the work. And if you're just finding me for the first time, welcome. We're only here once. Okay? We have a lot of tools at our disposal to be great and maybe have some nice things, whether it's own a home. Maybe you want to have a home, maybe a little boat, maybe a car, a little Jeep, a truck. You want to go on vacation? You want to get your teeth fixed? I don't know. Maybe you want to pay for your kids' college tuition. I don't know. Whatever it is. All right, let's start getting there. If you want to learn how to trade, guys, trading is not a scam. Okay? Now, you are what's the word? You are speculating, but you are speculating that the tools you have at your disposal, i.e. indicators, are telling you the truth, and there is a story painted for you so that you are able to, somewhat understand the direction, okay? And the upper hand that we have with the markets is that we can control our losses. We can't control our wins. It can go up and up and up and up and up and up. We can make a whole lot of money, but guess what? Our upper hand is being able to lose a little bit every single time so that we make more when we're right than when we lose when we're wrong. That's the name of the game. That's it. Now, and the other thing is having the confidence, guys. You can't just say, oh, I got a little break and retest here. Oh, look, it went up and then it pulled back to the highs. It's holding the highs. Let me go long. Give yourself a little bit more than that speculation. I want to say, yo, look at my RSI at 49, 39, whatever it is. Look at the MACD getting ready to cross over from negative to positive. Look at the 5-minute versus the 15-minute versus the 1 hour versus the 2 hour versus the daily and the weekly. They're all telling me a story here that these moving averages are getting ready to pull back. We're going to get a bounce and probably go meet that moving average a lot higher. Understanding the story that's unfolding in the future. Because these indicators, again, guys, there is more to trading than just, speculation, okay? Right? You can pretty much almost confirm how the next few days, weeks are going to play out. Again, the timing is the aspect there that's a little tough. But again, we have indicators to help us say, hey, are buyers stepping up or are sellers stepping down? Because that in and of itself is a story. That is either showing you weakness or strength. Are people willing to pay are buyers willing to pay a higher price because they want in and they want in right now? Or are sellers stepping down saying, I want out, I don't give a shit what price, get me out now. Something's wrong, I don't want to be here, get me out. That is the scenario that you may or may not even take notice in. As it's going higher, oh my God, I'm going to get short and just think that there's a short, I just think it's going to pull back. No. Right? Let's find the divergence. Let's wait for that first initial weakness. Let's smell the blood in the water. And then you get the pop. You get the fish squirming. You've located it. Bang. We hit it. Right? Just like the camera going out. Okay? I do apologize. You guys have to bear with me. So real quick. Let's go over some charts. All right. Real quick. We'll go over some of the plays. Okay. Apple, Friday morning. We took 185 calls. We were also in 185 puts on Monday. All right. AMD 175 calls on Thursday. I went briefly short on that, and I said I am not calling this out as a play for you guys because this was more of a scalp for AMD to pick its direction. Made money on that. Made money on the call side. I took Tesla puts, Qs. I went long and short. Netflix, I hit the short twice. The first one I made money. The Netflix second trade, I couldn't get out because I was unwilling to, get filled at the bid. I didn't want that. It actually moved in my direction, and this will be a trade idea that I go over with. The asking price went way over, and usually you'll get filled. But that told me a story when I didn't get filled. I don't know. Let's just say 22 cents, right? I had a bid out there at 22 cents to get out of these options, and it went to 24, 25, 26. Now you say, well, there's a spread there. Well, yes, there is a spread, but that's not the point. The point is when you do this for so long, you notice when things start to happen. You notice when you get filled on the ask or just under the ask when it pulls back down, because when it fills you in those type of positions, it usually means there's going to also be a continuation. It usually means that the market makers want those puts. They didn't want my puts. They said, bro, this stuff ain't moving today. I don't want that. You're going to have to come down, son. I didn't want to come down. Guys, I had such a great day. I said, here you go, market. This is my little tip to you for this is my thank you for the week that I had. Really for the day. Because the day made the whole week/month. All right, but again, I did what I said. I said last week, I am going to get 100 or over 100% triple digit gain if this market gives it to me. Guess what? It gave it to me. I got a 225% on mRNA, Moderna, short, Thursday into Friday. We had multiples. 185 puts on Apple on Monday. All right? I sold those puts because I was not going to let the market grind higher and just sit in them. No, I got rid of it. I said, I'll get back in these. All right? We talked about that. I had two small losses, Netflix and Apple. Okay, Netflix and Apple. I traded Apple like 3 times this week, 4 times. Don't quote me. It was like 3, 4, maybe 5 times in multiple directions. Okay, just like the Qs. I went short. I was long. AMD. I was short. I was long. Netflix. I was short. Moderna short. And I'm sure there's more in there that I'm forgetting. It was a busy week. So let's go to the S&Ps. Let's talk about markets real quick. Again, I got to get to the pet. Excuse me. I'm sorry. I got to get to the pet store. It's getting really late, guys. The S&Ps, all right? I want to look for a pullback. Now, this is just right now. I want to see what happens if futures can get down to or SPY can get down to 492.50. Let's see if that holds, or if we hold and it bounces and we put in like a lower high. And once you guys have noticed something on the daily chart real quick, I do got to hurry up. And we're gonna have Sunday night charts tomorrow. So think about some of the earnings and the sentiment. Start getting the levels. Remember what happened last week. Take some of those trade ideas from last week, like regional banks, Tesla, semiconductors, all that fun stuff, and throw them into this week. Let's get busy getting these levels. Look at the divergence we have here. Let me just pull this up, actually. Let's go here. All right, let's go to the SPY. All right, and I want to show you guys, this is what I love. And I think I'm going to be, again, I told you guys last week I was going to buy the VIX, but I think it's also definitely coming this week if we can get that pullback. All right, TVIX, no, we don't have TVIX anymore. Double leverage ETF for the VIX, okay? I'm going to do a leverage ETF. Look at this. All right, what I want you guys to see here, all right, is this divergence. All right, we're making new highs. And what is the stock doing? What's the SPY doing? What's the RSI doing? Look at that. Making new lows, okay? Making new lows. Making lower highs. I'm sorry, making lower highs, okay? So we have that for starters. Come on. I'm sorry, I didn't mean to yell. All right, so we have that for starters, right? All right, lower highs. What's the stock doing? Stock's making higher highs. Look at that. Bang. We have gaps below us. You still have a gap at 440, 420, 422 area, okay? Look at the Qs. Let's look at the Qs. They did not close at a new high. They didn't. All right, they did not close. CLOSE. They closed down here at 429.14, just under that previous midday high from 2 weeks ago. Okay, that's the Qs. Also, a lot of divergence, and I want to show you guys a couple of trade ideas here. All right, I'm looking at, the Dow has been a winner. All right, and I brought that up to you guys. Look at the trade ideas that I've been bringing up to you guys. All right, let's go to the Dow. I gave all these out to you guys last week. It's up to you to write them down and execute. All right, write it down, execute, because you think that, hey, I like this idea, not because I just brought it forth, but because you honestly think, hey, my risk to reward here is at its greatest. Look at this, a consolidation with a consolidation, bull flag breakout off of this triple top here. Got the little head and shoulders, I guess, but look, bull flag, bang. You could have taken this. I gave you guys plenty of time. I gave it to you last Sunday, Monday, bang. Give it to you last week right there. And I said here, look here, guys. Boom, boom, buyers are stepping up. Buyers are stepping up. Again, this is just a small, example of the stuff that I give out. It's up to you to write it down and execute. Guys, you guys understand how much money you could have made from this? I don't think you do. Now, again, I'm only one person. I can't just trade everything. I wish I could. Maybe I should. Maybe I should start just, trying to just put out the orders. But when it comes to managing it, it's not putting the position on for me to have a whole bunch. It's when I go to manage it. I'm not just going to market order in and market order out. You can. But I like to work for my money. If you don't work for my money, you're not getting the most out of it. You're not getting the results that you should. All right. Now, as a beginner, I would not do some of the things I do, like limit ordering out. You need to know what you're doing. You do. You need to know what you're doing. All right, so let's see if the Dow pulls back to this high. Now, look, real quick, the IWM. All right, we smelling weakness, like a shark in the water, smelling blood. All right, we're on to something here. Look at this this level here at 195. Okay, 195, we failed to get back up above and hold. Now, either we're going to go higher and bounce off this 50-day moving average, which is a daily moving average. Carl Cantanilla put out a chart this week, okay, on Twitter. All right, and what he said was, every time the Fed cuts, the IWM has went about 50% in a yearish or something like that. Here we go. I'll bring it up for you. Okay. All right. I'm pretty sure it was Carl Cantanilla. All right. Russell 2000 gained 55% after the Fed stopped raising rates. After the Fed stopped raising rates. Well, the Fed has been stopped raising rates. Now, you can't just go by this and say, oh, diagonal line to 2025. Like, this diagonal line could start, like, towards the end of 2024 and go into 2026. Okay, so it's when. Now, we talked briefly about AI and biotech. Okay, if we start to, and I'm telling you guys right now, we literally said this Friday in chat when a member asked me about AI and some of these other things, and I started bringing up, what does that mean for biotech and like surgeries and like what, there's probably something out there that we don't even know, like that we can't even think of, that they've already thought about and they're in the labs working on them. Right? Just ideas in general, right? Whether it's like the example I brought up was reading blood, like Thanos back in the day. Maybe with AI, we're able to have the tools now to possibly be able to, or at least, we've always had these tools. It's just, can we start using less blood to read samples? Just an example, right? There's just a lot that I probably don't know to think of to give you an example. But I said, those biotechs, when rates are higher, you have to watch when rates start to pull back to be in those biotech names, guys. There's a reason why there are some sectors doing better than others right now. Okay? Like, oh my gosh, come on. I'm sorry to yell in the video, and I don't want to yell because I want to be professional. But there's always a winner and a loser and for different market conditions, okay? So IWM is still just, the IWM closed red. Okay, on the day, it closed green. But from, the prior day's close, guys, it closed red while the market's closed green. Okay? So I want to see if we have a failed breakout here with the IWM and if we can get another pullback. I would like to see if we could get another pullback. I don't think that's the case. I think we get a bounce and then the pullback. But I will be watching IWM because we're right at that 50-day. Now, if we start to crack that 50-day, I will look for a short. All right. I'm going to tell you guys right now, if we get another opportunity at 195, I will take this short. Okay. It's like 195 to 195.93. So maybe like 196.25, 196.50 will be my stop loss. Now, why is that? Right. So if I'm going to get short at like 195 and it gets up there and I get short, let's say 195.25, right? And I'm going to risk 75, call it $1, right? 96.25, 96.50 area, an area up here where I know that I'm wrong. Well, if I'm going to risk $1, well, you would think I would want at least $1 or two, right? For the upside. Well, yes, exactly. If I get short up here, my potential trade is all the way down to 191. Right, to these prior lows. So I'm going to risk 75 cents to $1 to make 3, 2, 1. To make $3, $2. That's a 3 to 1. And that's if I let my stop loss hit. That's if I have the worst entry in the world. That's if I assume that that's what the stock's going to do and I get in it before it gets, like as it's getting into that level, I get in it. Well, I could let it get up there, see how it gets there. If it gets up there on volume, maybe it cracks it, right? It starts trying to go higher, and then you get a failed break. Bang, I'm in it. Now I'm in at a lower price. My stop loss is smaller. I'm in at a lower price, okay? And that's the other part to this game that I have not mentioned is understanding that if you buy right, you're going to lose less no matter what. If you stick to stop losses. If you know how to read a chart and stick to stop losses. If you buy right, you will lose less because not only are you going to pay a cheaper price for, let's just say, contracts for options, you're going to pay a lower price for those contracts, and it's got a smaller area of movement to know that you're wrong. It's the biggest reason why you can win at this game. All right, so that's about all I got, guys. I will be watching names like Tesla. Boeing, guys, I think will be consolidating for a little bit. What I wanted to show you guys is look at the divergence of Tesla. Okay, Tesla did close red on the day. I almost got short Tesla, but it hasn't been giving us the follow through, right? If you know what I mean. It just hasn't, it just hasn't been Tesla lately. It's kind of just up and down. So we do have a huge bear flag forming here. What I want to show you guys real quick before I go is that you have the Tesla just lacking its sector. Look at this. Tesla, Toyota Motor Companies. But look at Stellantis, GM, Ford, Race, Lee, Auto. So Tesla didn't do too bad because you got some reds in there. But NIO down 10%. Xpeng down 9%. Those Chinese auto manufacturers. Lucid was up 24%. Holy. Let's go look at Lucid, guys. Is anyone talking about Lucid? LCID. Wow. Did they have earnings? Or no? This was a nice pop. Holy shiz, guys. Guys, I'm telling you right now, I love Lucid. The stock, I would like to love it, but the cars are beautiful. They're awesome. All right, let's put Lucid on the list because it looks like we got a bottoming setup there. This could be a really nice setup for a long. We'll see. That 50-day and that prior support is a major rejection or resistance level there. So let me write down LCID. I'm going to go in more Meta, Apple, LCID, Lucid. Shit. All right, guys. I am sorry that I have to go here. There was a lot that I wanted to cover, but we're going to go into charts tomorrow. I just wanted to cover the Fed meeting, some of the news we got this week, the earnings and things like that. Look at the candle here on Apple. Look at that daily candle. We're going right back to that 50-day moving average on Apple. Again, I traded Apple all this week. I tell you guys the one thing that I'm great at is putting us in the right parts of the markets. Look at this really nice double bottom here. They did have their release for their new product. I would also look for this level right here, guys. I would really look for like 185. It's a small level, but if you're able to hold that or break it, if you cannot get back above 186, you got to look to either hold or break 185. All right, and then see if you can't pull back down the 182, the low 180s. Guys, I love you all. You guys have a great night. Remember, Google and stuff. We're going to go on the chart Sunday night. Please, I urge you, hit that like button, subscribe if you have not already done so. We are on our way to 1,000 subscribers. If you are a service member, okay, I tried to be in the service. I tried to go to the service, but I had open heart surgery. You guys can probably see the slit on my neck. All right, collapsed lung, all that fun stuff. You know, so got a little bit of war stories. Anyway, thank you guys for joining us tonight. Tomorrow night, Sunday night charts. Be there sharp. Okay, let's have another great week. Let's start February off on the right foot and make some goddamn money. All right, let's go, guys. We had a great month. Let's clap it up. We had a great month. Tomorrow night, today's Saturday, tomorrow night, 7:30, 7 o'clock. How about 6:37? Subscribe. I'll post it up. We'll come on right around when futures open up a little bit after. And we'll go over some game plans. We'll go over some news. Like, if anything happens over the weekend. Again, we have Powell. We have Powell at 8 o'clock. So I kind of would like to wait for that 60-minute interview where he asked Powell. And again, this was already previously recorded. You know, why aren't you cutting rates? Inflation is down, blah, 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 blah. He's going to come up with the excuse. Well, you know, we don't want to get caught with our pants down in case inflation goes back up. Bro, inflation ain't going back up. Now, unless you get a war or something crazy and China shuts down again and COVID goes crazy or like some crazy reason, it's highly unlikely. So I think it was just a lot of talk, okay? Because they don't want asset prices screaming higher because that is inflation in and of itself. The market caps of companies going higher, that is inflation of itself. So hit that like button, subscribe if you haven't already done so, guys. Join us tomorrow night for Sunday Night Charts. All right, I love you guys. Let's do it. All right. I just wanted to say again, comment down below. Let me know how your month went. If it was bad, if it was good. Where did you feel that you did well? Where did you not do well? What do you think you can improve on? What could I help you with? I love you guys. Have a great night. Please comment down below. Subscribe. We're on our way to 1,000 subscribers. Thumb it up. I love you guys. Have a great night. I'll see you guys tomorrow night.